Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Joining us today to do Stock Movers, John Tucker here. It's a podcast. Good morning, John.
Yes, it is. Apple losing more talent. The number 2 guy there is leaving. He's the chief operating officer, Jeff Williams, retiring. 62-year-old Williams, once considered a possible successor to the CEO, Tim Cook. So somebody by the name of Sabih Khan is going to replace Williams as CEO, while the Apple chief design team is going to shift to reporting directly to Tim Cook. Now, at Apple, Williams was known for crafting the supply chain. It could handle hundreds of millions of devices a year and source components from thousands of suppliers around the world. So a pretty complex job. This marks a major changing of the guard at an already pretty tumultuous time for the iPhone maker. Well, yeah. Yesterday, we told you about the exit of Roming Pang, an engineer and the manager in charge of the Apple Foundation Models team. He's headed to Meta. And Facebook. I also want to bring, there was an interview with Peter Navarro, the trade guy on Fox, and he said, Apple, quote, thinks it's too big to tariff. So that's another concern.
Stock down 16% this year to date.
Yeah.
Thrown into the mix there.
Lagging. It's very un-AI.
Let's move on to the next one. The Department of Justice, the Criminal Healthcare Fraud Unit, intensifying its investigation into UnitedHealth Group, the Medicare billing practices there. And they're focusing on how it leveraged doctors and nurses to boost government payments to the company. This probe began at least a year ago. It's now drawing fresh scrutiny. Former employees are now speaking with federal investigators. This, according to the Wall Street Journal, they're reporting that former UnitedHealth employees told investigators the company encouraged the capture of certain lucrative diagnoses during patient assessments. And finally, what happened to the smart glasses that Google had?
Yeah, exactly.
Well, it's all making a comeback. This time, Meta Platforms, they have bought a minority stake in the world's largest eyewear manufacturer, EssilorLuxottica. This is all about smart glasses. Meta acquiring just under 3% of the Ray-Ban maker. It's a stake worth about $3.5 billion. Meta's considering further investment that could build the stake to around 5% over time. The two companies have worked together for a few years to develop AI-powered smart glasses. Meta is currently selling the image capturing, real-time stock prices, all that stuff, into their Ray-Ban glasses, which are pretty smart looking. I think
is there any indication, Paul, this is going to work?
I don't know.
I need proof of concept.
Yeah, I don't know.
I want the Bloomberg terminal on my Ray-Bans.
Oh, that'd be cool.
So I don't have to look at the screen anymore.
Exactly. I can see
you stock quotes just staring at you.
I don't know. I feel dumb on this.
I mean, I'm very uncomfortable with the concept of somebody looking at me and recording me.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.